Right now, everyone is staring at the number. Bitcoin under $67,000, down more than 40% from its high. And they're asking the wrong question. They're asking, how low does it go? That's not the question. The question is, who is doing this and who benefits? Here's what I want you to hear before anything else. This drop was not a surprise. Not to this channel. Back in February, and I'll show you the receipts in a second, I told you Bitcoin is a liquidity thermometer. I told you that when the system's money got drained, Bitcoin would feel it first, and that when the repricing finally came, it would not be gradual. It would be violent. Well, here it is. And if you've ever felt like this market is rigged against regular people, like the rules quietly change the moment your money's on the line, stay with me, because what's happening underneath this crash is going to confirm exactly what you suspected. This isn't panic, this is a harvest. And by the end of this video, I'm going to show you who's holding the basket. And it leads somewhere almost nobody in the financial media is willing to say out loud. Let me break it down. Let's start with what you're actually feeling right now. If you own Bitcoin, your stomach dropped this week. A month ago, this was trading in the mid 80,000s. Today, it's under 69. That's not a wiggle. That's a chunk of your net worth gone in a few weeks. And the headlines are screaming crypto crash, with no explanation that actually helps you. And here's the part that's really gnawing at people. It's not just Bitcoin. Spot Bitcoin ETFs have now bled money for 11 straight days, almost $3 billion walking out the door. And the company that became the face of Never Sell, the largest corporate Bitcoin holder on earth, they just sold. First time since 2022. A small amount. But the signal hit like a truck, because it broke the one promise this whole cycle was built on. So the fear underneath the fear is this. Is this the start of something bigger? Is Bitcoin the first domino? And if the people who said they'd never sell are selling, what do they know that you don't? That's the real anxiety. And it deserves a real answer, not a price prediction, a mechanism. Let me show you what's actually happening. Here are the receipts I promised. Because I need you to know, the rest of this video isn't hindsight, it's the thesis playing out. February 25th, why your portfolio is lying to you. My exact words. Bitcoin behaves like a liquidity thermometer. When liquidity tightens, they feel it fastest. February 27th, the Buffett video. I said the structural break he was positioning for was a liquidity freeze, not a market crash, and that when that gap closes, and it always closes, the repricing is never gradual. It's violent. March 18th. Liquidity just left, but nobody noticed yet. I told you we were living in a 2018 style delay, a lag between when the money gets pulled and when prices finally react. That lag? It just closed. This is the reaction. So let me explain the machine, simply. Think of liquidity as the oil in the engine of every market. Stocks, housing, and yes, Bitcoin. When there's a lot of it, everything runs hot and prices climb. When it's drained, the engine seizes. And since 2022, the Federal Reserve has been draining it on purpose, pulling roughly $2.4 trillion out of the system. The plumbing of Wall Street, the overnight funding markets, started flashing red. Sticky inflation means they can't just turn the taps back on. The dollar's been strong. Rate cuts everyone was counting on? Not coming on schedule. Now here's the key idea most people never connect. Bitcoin trades 24 hours a day, 7 days a week. Stocks close. Bonds close. Bitcoin never does. So when liquidity tightens, Bitcoin is the first place the stress shows up, because it's the only market open at 3A.M, when somebody needs to raise cash right now. That's why it's the thermometer. It's not that Bitcoin is uniquely broken. It's that Bitcoin tells the truth first, while everything else is still pretending. So when you see Bitcoin under 69,000 while the stock market is still holding up, don't think Bitcoin is weak. Think Bitcoin is the early warning, and it's screaming. If this is finally making the last few weeks make sense, do me one favor. Drop a comment and tell me, are you seeing this drain show up anywhere in your own world? Your portfolio, your business, your bank. I read these, and they're the early signals the headlines miss. Okay, so liquidity got drained, and Bitcoin reacted first. That explains the pressure. It doesn't explain the violence of this specific week. For that, you have to follow the money. And this is the part nobody's saying out loud. First, the harvest. In the last 24 hours of this move, more than $790 million in positions got liquidated. 155,000 traders wiped out. Now understand what a liquidation actually is. When you bet on Bitcoin with borrowed money, the exchange sets a price where they automatically close you out. Those prices cluster. Thousands of them stack up at the same levels. And here's the uncomfortable truth about this market. The big players can see those clusters. There are heat maps. The liquidity isn't where retail thinks it is. It sits exactly on top of where everybody put their stops. So when price gets pushed down hard into one of those clusters, it sets off a chain reaction. Forced selling triggering more forced selling. And somebody on the other side is buying it all up cheap while the herd gets flushed. That's not a theory I'm spinning. Hunting liquidation zones is a documented strategy. This week, the move to 69,000 broke a pattern every trader was watching, right into the biggest cluster on the board. Ask yourself, does that look like panic? Or does it look like a trigger being pulled? Second, and here's where it gets bigger than crypto. Who actually benefits from Bitcoin bleeding this specific week? Let me lay out 4 facts. I'm not going to connect them for you. I'm going to put them on the table and let you connect them yourself. Iran is sitting on a crypto war chest worth nearly $7.8 billion. Its Revolutionary Guard accounts for roughly half of the country's on-chain activity. This same stretch, the U.S. Treasury announced it has seized about $1 billion of Iranian crypto. They're calling it Operation Economic Fury, and froze another 344 million. And Bitcoin dropped below 71,000 the day Iran ended talks with the U.S. and threatened to blockade the Strait of Hormuz. So here's the question I keep coming back to. If a foreign adversary is using Bitcoin to slip past sanctions, and you wanted to hurt them without firing a shot, what's one way to do it? You make their war chest worth less. You drain the liquidity, you push the price into the clusters, and you let the cascade do the work. Now, I want to be straight with you because that's the deal on this channel. I can't prove a single player crushed Bitcoin this week to weaken Iran. Nobody can. That part is a question, not a fact, and anyone who tells you otherwise is selling you something. But the motive is real, the seizures are real, the liquidation sweep is real, and the timing is real. So I'm not going to tell you what to believe. I'm going to tell you to watch who's still standing when the dust settles. Because in this market, the people who get hurt and the people who benefit are almost never the same people. And it's almost never an accident. So what do you actually do with this? Not financial advice, I'm not your advisor. But here's the framework I'm using and the exact signals I'm watching. Signal 1. The line in the sand is 56,000. Back in February, Bitcoin wicked down to around 56,000 and bounced hard. That's not a random number anymore. That's where the last real buyers showed up. If 69,000 fails and we head there, that February low is the level that matters. The bull case and the bear case both live or die right there. Watch it. Signal 2. Check your leverage before anything else. The people who get destroyed in a liquidation cascade are almost never wrong about Bitcoin long term. They're wrong about borrowing. If you're using leverage in a market that's actively hunting liquidation clusters, you are the product. Don't be the liquidity. Signal 3. Access beats yield right now. This is the thread through everything I've told you for months. When the system tightens, the most valuable thing isn't return. It's access. Owning something a counterparty can gate, freeze, or sell out from under you is a different risk than owning something that's actually yours. That's the entire argument for self-custody, and it's exactly why this drop, as ugly as it is, doesn't change the long-term case. It clarifies it. Bitcoin didn't break this week. The thing it was built to escape. A system where someone else controls your access just showed you its hand again. So let's put it together. Bitcoin under 67,000 isn't the story. It's the symptom. The story is the liquidity I told you was draining back in February, finally repricing everything, violently, first in the one market that never closes. The cascade this week was a harvest, not a panic. And the question of who benefits leads somewhere most people are too comfortable to follow. If you want the deeper macro map behind all of this, the one big theme I'm tracking each week, it's in my free newsletter, linked in the description. It's about building a framework to think instead of just reacting to red candles. And next, I'm going to follow this exact thread into the treasury market, because the same liquidity squeeze hitting Bitcoin is showing up in U.S. government debt. And what I found there is the part that should actually have your attention. Subscribe so you don't miss it. Because the people who saw this coming didn't have a crystal ball. They were just watching the right thing. I'll see you in the next one.